Robert, I do want to get kind of your take here, just how you evaluate all of the different AI-related deals that are coming through. Is there one area that's most attractive? Is it we only want to do GPU deals? We just prefer the power, the utilities? How do you think about that?
Well, I think we have to take a step back and say, what is the probability that we're in an AI bubble? And I guess we'll define bubble really quickly. Credit bubble would be credits that are unable to pay back the debt, and it seems pretty obvious at issuance. So we saw that in energy, where there were bonds that just you knew they couldn't pay them back, and they defaulted right away. So credit instruments that require a lot of growth, I wouldn't call a bubble, but I think that credit that basically is doomed is a sign of a bubble. We're not there yet. The equity markets kind of worry me. So the definition of a bubble in my mind for equity bubble would be valuations, growth expectations that are impossible to meet. I think for some of that, we're starting to get there. So if you think about the backdrop of what's the probability that we will be in an AI bubble, maybe I'll put 100% on that because we have 200 years of industrial production that has led to bubbles whenever there's a huge technology development, whether it's railroads, we've heard all the stories, railroads, telephone, internet, and then now AI. I think you have to think about what credit will survive a deep cycle. So I think the hyperscalers broadly, well, I shouldn't say broadly, some of the hyperscalers will do well. I worry about Oracle. So Oracle looks like it kind of has a high yield sort of profile. The spreads look like high yield. So you want credits that either through structure or just a very strong balance sheet will survive through a cycle. That's the lens. So I don't want to take a lot of technology obsolescence risk. So I was an analyst when the dot-com bubble burst, so maybe that's coloring my view. But I can check a lot of the boxes for things we saw there. But I think that's you really need a strong balance sheet more than that, more than anything else. I think the speculative credits that we really haven't seen yet, but I'm pretty sure are coming, are the things to watch out for. The credits that need a lot of growth in order to service debt, that's what you need to worry about. So if you're looking at a credit and the cash flows and structure you see now are sufficient to pay off that or to service that debt load, then I think that's something that's going to survive a cycle. But the ones that need dramatic growth, that's what I'm worried about.